Today I will give you a solid structure you can follow to trade calmly and predictably. Number 1. Consistency isn't always green, it's always by rules. Make a no-trade list, at least 5 items. For example, number 3. Entry condition, one setup, one formula. Number 4. Risk is a dosage, not a belief. Number 9. Acquired personal principle, freedom, process. Key point, if you can't describe your setup in 2 sentences, it's not a setup, it's improvisation. You need an emergency protocol. Here is the principle. Break even proves you can defend yourself. If the market doesn't give follow through, you protected your capital and your mindset. Hey, I'm Ravi Kumar. At some point I realized this trading doesn't break people who don't know strategy. It breaks people who act differently every single day. One day is one rule, the next day is another, and the day after that no rules at all. And then your account starts looking like a heart monitor. Consistency doesn't show up when you find the perfect entry. Consistency shows up when you build a protocol that protects you from rushing, greed, and chaos. Today I will give you a solid structure you can follow to trade calmly and predictably. How to make decisions, where to set boundaries, how not to slip into gambling mode, and how to track stress so that the market stops feeling like a roulette. If this kind of approach is your vibe, subscribe, hit like, and check out my Telegram, link in the description. I share checklists, journals, spreadsheets, and example of how I personally keep discipline. Let's go. Number 1. Consistency isn't always green, it's always by rules. A lot of people want consistency to mean never being wrong. That's a myth. Everyone is wrong sometime. Consistency is when you have same conditions, same action, risk always kept, results you can measure over time. Your main metric isn't how much I made today, but how many trades followed the protocol. Remember, a green day with rule breaking isn't a win, it's a delayed penalty. A red day but fully by the rule is just normal statistics. Number 2. The protocol starts with a filter. When I don't trade, the strongest rule isn't about entries, it's about ban. The market is often choppy and whispering, directionless, in a transition phase, or just messy, and that's when the trader lose the most because they got bored. Make a no trade list, at least 5 items. For example, I don't trade if price is stuck in a tight range and candles have long wick on both sides. I don't trade if I miss the move and want to chase it. I don't trade after 2 losses in a row without taking a break. I don't trade if there is no clear level structure. I don't trade if I already hit my trade limit. This creates the foundation. You stop feeding the market random entries. Number 3. Entry condition, one setup, one formula. The main reason your head feels like a mess is having too many setups. It seems like more tools, more chances. In reality, it's more mistakes. The right approach is simple. Take one setup and turn into a formula. Context, location, trigger, stop, target, invalidation. Example not tied to any specific market. Context, uptrend. Location, pull back into support level. Trigger, candle reaction plus confirmation. Volume microstructure break. Stop beyond the level. Target, nearest liquidity, next level. Invalidation, acceptance below the level or structure breakdown. Key point, if you can't describe your setup in 2 sentences, it's not a setup, it's improvisation. Number 4. Risk is a dosage, not a belief. Most people think if I'm confident, I can risk more. The problem is confidence. More comes from emotion, not analysis. Risk should be fixed and boring. Basic model. Risk per trade 0.5 to 2% depending on experience. Maximum trades per session 3 to 6. Daily loss limit 2 for R. Then you stop. R is your risk unit. If you risk 1 hour per trade, your job is to think in R, in dollars. That kills the gambling impulse. Number 5. Stop rule. What you do when things go wrong. Consistency doesn't break on the entry, it breaks after a loss. You need an emergency protocol. 2 losses in a row, 15 to 30 minutes break. A loss, urge to win it back. Close the platform for 10 minutes. A streak of emotional trades, end the session. Never increase risks after a loss. Never chase a move. These rules stop one bad movement from turning into a disaster. Number 6. Break even is also a result, and you need a rule for it. Break even often annoys people more than a loss because it feels like I wasted my time. That's when overtrading starts. Here is the principle. Break even proves you can defend yourself. If the market didn't give follow through, you protected your capital and your mindset. So the rule is, after break even, don't speed up. Go back to your entry conditions and wait for the next clean setup. Number 7. The journal. Without it, you will always feel like you are doing great. Without a journal, you don't actually know where you truly make money, where you truly lose money, which mistakes repeat. What to cut first? Minimum journal format, date, time, instrument, setup, market context, entry, exit, stop, result in R. Followed rules, yes or no. One mistake or one takeaway. Main rule, one takeaway only, not change my whole life. One improvement for tomorrow. Number 8. Series math. Think in sample, not single trades. One trade proves nothing. Even 5 trades is too small. Real data starts at 30 to 50 identical entries. What you must calculate: win rate, average win, average loss, expectancy, maximum drawdown. Simple idea. Even with fewer winners, you can be profitable if your average win is bigger than your average loss. That's the pro mindset. Number 9. Acquired personal principle, freedom, process. When I stopped chasing quick results, everything changed. Not because the market got nicer, but because I stopped arguing with it and started executing process. That's where freedom comes from. Not one lucky trade, but a system that doesn't break. Let's lock it in with one sentence. A trader becomes consistent not because of a perfect signal, but because of a iron protocol. If you want real progress, take 3 steps. Number 1. Pick one setup and write it as formula. Number 2. Lock in your risks and limits. Number 3. Journal and trades. And improve one thing per day. And remember, the market doesn't reward the bravest, it rewards the most disciplined. If you want, my Telegram has a protocol template and a journal template. Grab it and use it. Subscribe, hit like, and I will see you in the next video breakdown.